A very good morning and welcome to Opening Bell with me, Stacy Pereira. I'm here to take you through all the news and cues that you need to be watching out for that can go ahead to impact your trading day. And well, it has been quite an interesting week, at least all what we saw of last week. That trade setup for the coming week has been laid out. Now, we did see how markets rebound on Friday quite sharply. However, for the week, we did see the Nifty closing above that 22,100 levels, and that's where we need to see whether there is an up move from there. For the sensex too, we saw about 1,157 odd points of losses coming in there, but the broader indices also seeing cuts of about 2 and 1%. Now, these divergent cues is what we're really going to be picking up from. Geopolitical tensions in the Middle East, that hawkish stance from the Fed comments that we saw on Thursday, as well as FII, that selling pressure continues. And of course, we're sitting at an FNO expiry week. So how does it really matter whether the volatility is really going to pick up from here? And of course, the Q4 earnings, we have heavyweights like Reliance. We saw all the IT companies come out with their earnings, so we're going to see reactions on that. We'll discuss all those strategies and stocks that you need to be watching out for. But before that, let me take you through all the top headlines. Now, Wall Street closed mixed on Friday. The Dow Jones gaining while the Nasdaq and S&P 500 slipping for the sixth straight session, led by a sell-off in Nvidia. Markets in the Asia-Pacific region now have opened largely higher after Friday's steep fall. The GIFT Nifty, though, is indicating a positive start for the Indian markets. Oil prices, however, have stayed firm at $87 per barrel in early trade, despite that 3% fall that it saw last week after those geopolitical developments between Israel and Iran weighing in on sentiment. Gold prices have now continued to rise for the fifth straight week, with the safe haven buying, however, pull back with international prices trading now below $2,400 an ounce. And HDFC Bank has delivered a positive surprise on the net interest margins, but profits have missed estimates on that 10,900 crore provision for a balance sheet buffer. On the other hand, we saw Wipro's margins beating estimates in a largely in-line set of fourth quarter numbers. The new CEO, Srinivas Pallia, says that the company will be bold on acquisitions as well as highlights 5 focus areas to get back to profitable growth. And the big number to be watching out for today is from Reliance Industries, which is expected to report a stable set of Q4 earnings. Improvement in their core refining margins are likely to be the key driver, as well as subscriber additions in the Geo vertical is also expected to improve sequentially. Those are pretty much those big headlines that we need to be looking out for, but the trade setup seems fairly positive for Indian equities. Now, let me take you through some of the F&O cues that you could be watching out for. As for the monthly options data, we did see maximum call open interest seen at that 23,000 strike, which is almost at about 1.02 crore contracts. Now, that's quite a high number. Whereas on the other side, on the meaningful call writings, we did see 22,500 strike. And remember, if you look at the put call ratio, the Nifty PCR, which pretty much indicates that mood of the equity market, that one has climbed to 1.03 versus 0.93 levels on April 19th. And remember, this means that there is traders are selling more put options than call options, which indicates a bullish sentiment in the market. But as for the stocks that are put in the F&O ban, there's quite a few of those. NSE has gone on to add Biocon for the F&O in the ban list for April 22nd, that is today, and has gone on to retain Balrampur Chini, Bandhan Bank, Exide Industries, Vodafone Idea, Metropolis, Healthcare, Piramal Enterprise, Sale and Z Entertainment. All of this continue to be in the ban list. And the one removed from the ban list, there's GNFC, Hindustan Copper, as well as a National Aluminium Company or NALCO. All of those 3 have been removed from the ban list. As for the fund flows, now that's interesting because we did see foreign institutional investors go on to become net buyers once again, but buying shares only worth about 129.39 crore rupees, whereas it was the DIIs which went on to sell about 52.50 crore rupees worth of stocks on April 19th. As for the India VIX index, this is the volatility index that has been rising for the 5th consecutive session, now up by 3.2% or at around that 13.46 levels. Remember, it also touched that 14 point level sometime in trade on Friday. So that's quite interesting to see how we go ahead from there, whether there is further more volatility that we could expect. That is something that we are going to wait and see in this whole trading week. Of course, it is, like I mentioned before, the F&O expiry for the whole April series. So that is definitely going to bring in that volatility. We're going to see traders really be cautious at this point. But let's discuss all of these stocks and strategies, and joining me for that is Kunal Rambhia. He's a fund manager at Streets. Good morning, Kunal. Nice to have you on our show on this Monday morning. Now, give us an idea of how one should be trading in the Nifty, particularly, especially now that we are in this F&O expiry week. What can we expect? We are seeing very, quite big swings for that matter. We did manage to hold on to that 22,100 levels, but what would be on the charts, or what are the charts really suggesting? Are we going to see a further upswing from here, 22,300 back again, or we're going to slip back to 21,800? Because that roughly is what the charts are really showing. What is your take on this?
Very good morning to everyone. Thank you so much for having me on the show. So if you look at the overall trend of the market from beginning of December so far, yes, we have seen massive swings either being positive or being negative, but the trend is certainly definitely intact and it's still positive. So if I look at the Nifty itself, the strong support was placed at around 21,950. And what we saw on Friday was a get down opening, but it significantly reclaimed that level and the strength was really good. So I think this trend is likely to continue. The level to watch out on the Nifty is 21,950 as the ballpark number itself. If Nifty falls below that level, then certainly I think 500 to 600 points of more decline is likely to be seen. But until that level is taken out, I think one should remain bullish, and stock specific moves can always be captured, and on the indices we can always approach a buy on dip as a better approach.
Right. What about the Bank Nifty? That has also been holding and rising support, at least we could say, what we saw on Friday. Now, we did have HDFC that came out with its results on Saturday. So, are we likely to see some big action happening there within the Bank Nifty space, and also HDFC in particularly, because, we've not really discussed those numbers, and we'll get to all of those details. But Kunal, firstly, just your take on how one should be looking at the Bank Nifty, and then we'll come to HDFC and its earnings.
So yes, the Bank Nifty has been quite volatile. In fact, the moderate behavior was seen on the Nifty front, but Bank Nifty is crazily volatile. If I look at the support, it's placed at around 47,000, and the resistance is now placed at around 48,500. So in this broad bandwidth of around 1,500 points, we can expect the Bank Nifty to continue. We are nearing the resistance level right now. I think today we are opening at 48,150. So I think 350 to 400 points more on the upside is likely on the Bank Nifty, but from there again we might see a decline. So again, on the stock specific, we should be focusing more, and on the Nifty front, it can be buy on decline. On Bank Nifty, it can be sell on rise strategy. Though it sounds weird, but yeah, that's how it's working since last couple of months now.
We're quite interesting, that strategy to be adopting, at least for the index, different strategy that you could adopt for particular stocks. But let's talk about HDFC Bank in particular, because we saw those numbers come out on Saturday. It recorded a standalone net profit about 16,511.9 crore rupees. This is for the quarter ending March of FY24, growing that just about 0.9%, which pretty much was impacted mostly because of the higher provisions that they have put in place. The net interest income for the quarter came in at 29,077 crore. This is increased by about 2.1% compared to the previous quarter. On the asset quality front, we did see the gross NPAs dropping by just about 2 basis points on a quarter-on-quarter basis, coming in at 1.24%, and the net NPAs though have risen just by about 2 basis points too, coming in at 0.33% for the quarter. What is interesting though is to understand where really this net interest margin, because that's something that we've been looking out for, especially in terms of banks, and that one coming in at 3.44% was quite a good surprise for HDFC Bank. They've also made provisions of about 10,900 crores, and this is in order to strengthen their balance sheet, is what the management is saying, and that against that potential shock that they were given. The rundown though for HDFC Bank is now in their non-individual loans, so that will also be something to be watching out for. That stock specifically, HDFC Bank, let me get Kunal back and get his view on how should one be looking at it? That has seen quite a bit of upswing. Do you think now is a good time because the management has come out and given some bit of reassurance in what their path is going to be like, how they're going to be focusing more on profitability than on growth as much, and also the demerger, the fact that all of those have pretty much played out now, and the company has a clear provision, especially after when making those provisions of about 10,900 crores. Do you think it's out of the woods and one should be looking at HDFC Bank now? Is it a good time? Kunal? Right, we try and patch that line back again with Kunal, but let's also go through a couple of other earnings till then, and we did have Wipro as well that came out with its numbers. Now this is interesting because we need to see how technology stocks, and we did see all the three big ones at least come out with their numbers. While TCS had a pretty good set of numbers, we did see Infosys really take it on the chin, post its numbers pretty much beating and not really giving a good guidance for that matter. Wipro, on the other hand, did surprise in terms of its margins. It managed to stay onto that 16.4%, but we did see them also, give out, at least put out that plan in place, that 5 focus areas that the new CEO has laid out, that giving the the market some bit of reassurance, even though they've had such a slew of headline hitting with the top management exits, all of those really playing out, and also surprising in terms of their deal wins, because even though they didn't have any big deal wins, you did see them come out and put out a number of about $1.2 billion. That was for Wipro. So we're going to see that stock as well reacting to it. But if you have to look at the numbers per se, the net consolidated profit came in at about 2,834 crore rupees. This is down and about by about growing just about 5.2%. We would say the IT services revenue has fallen by 0.3%. Now this on a sequential basis coming in at 22,079 crore rupees. EBIT too just grew by only 2.2% as well, and which is an expansion of just about 40 basis points. So Wipro is what we're going to see some reactions to, though the IT pack as a whole is what we'll be discussing. But how are the markets really going to be giving a thumbs up to these numbers? We also had Persistent System from the Midcap space, which also put out its numbers, and giving a fair idea of where IT is really headed at this point, because we did know already, it pretty much factored in on how there is that spend, at least IT spends that had decreased from the global clients, and that's what we've been hearing from the managements as well. So there on your screens now, market open, you can see Nifty holding on pretty much, we would say that gap up, because there is about 120 odd points that it has managed to gain right at the start. So 22,200 odd levels, half a percentage point of gains for the Nifty, whereas the Sensex also there comfortably above 350 odd points that it has managed to click in at opening bell. So 73,400 levels for the Sensex. And let's look at the broader indices. Those two saw some sharp cuts. In fact, the Midcap index saw about 2.5% cuts in the last session. So now closing there by about 1% point up right at opening, whereas the small cap index also up by about 1.15% there right at opening bell. So broader indices, all of them pretty much in a good positive territory. The Nifty Bank Index also holding up there above that 47,900 level. So 48,000 pretty much in sight, we would say, at least for this session if one has to go by. But let's also look at the sectoral indices. The PSU Banking Index, they're also holding up quite strong. We did have the first phase of the election go off quite smoothly, and we saw PSU stocks, in the run up to the elections, them gaining quite a bit of traction. So that PSU Banking Index also seeing some good positive momentum. The IT pack also, after all of these results, we are seeing them in positive territory. We did have, we would say, in-line results, but giving some push to that index. The Pharma Index too, they're up by about a percentage point right at opening bell. So a lot of positive action from stocks like Lupin, Zydus, getting in some new launches that they have planned, and that playing up there. The FMCG pack, we are going to see earnings from HUL as well as Nestle later this week. So that pack also acting quite positive in opening trade this morning. You're seeing the FMCG and consumption, both those baskets playing out in the positive. Also with the elections happening, that is something, these are the stocks that pretty much work in tandem and see some good traction just in the run up to the elections. So FMCG and consumption basket also in the positive there. Also the metal pack, that one has been quite interesting and has been the front runner, we would say, in this rally that we've seen so far. The metal index also gaining by about 1.2% in this opening session, as well as the Nifty auto pack there also seeing some good momentum. So pretty much most of the sectoral indices also, all of them in the positive, we could say at this point. But let's also see which exactly are the stocks that are really pushing these indices or pushing all of these sectoral indices in the positive. And there on your screens, the top gainers, you are seeing BPCL, the likes of a Bajaj Finance, as well as Axis Bank, all in the positive. L&T, Adani Enterprise, as well as Kotak Mahindra Bank seeing some good momentum there. So those are your top gainers in trade for this moment. Adani Ports, another one, as well as Tata Steel and Ultratech Cement on the back of some positive news coming in from Ultratech as well. They are going to be buying in, and we'll talk about that in greater detail. But pretty much that is the setup. We are on to a good start for the week, we could say, even though we had mixed global cues. The Indian markets at least not really paying much attention to what we're seeing happen externally or globally, because those headwinds not having too much of a bearing on our Indian markets. Kunal, let me get you back again and give us a sense of what levels should one be tracking, or what should be the strategy, especially in an F&O expiry week. You did mention the levels for the benchmarks, but any stock specific action that you would want to pinpoint out at, especially in the heat of this earnings season as well. We have the big heavyweights that are going to be putting out their numbers. We did see all the IT packs as well. What would be your strategy at this point?
Not audible. Please come back again.
Kunal, can you hear me now? I'm just coming back to where we left off on, with the heavyweights pretty much coming out with their numbers at this point. How should one be viewing them? Is the earnings really right? Okay, we're going to try and go back to Kunal in a bit. We don't have that. But I do have Kranthi Bathini also joining me. Kranthi, welcome on the show, and thanks for giving us your time this morning. Let's get an overall picture from you. We have seen the first phase of the elections kick off quite well. There was pretty much in line, we could say that that's how the markets have factored in how these elections are going to be playing out. But do you think, is there any kind of upswing or downswing that can take us from here, and what would be those critical factors? Yeah, globally we do have the geopolitical tensions that are brewing in the Middle East. We're seeing crude now below that $90 per barrel, about $87, but that could still be, that could really pinch us somewhere a little. Besides this, any other headwinds that you see going ahead?
The one thing is the Fed action is very important going ahead with respect to the headwinds are concerned. As we have been discussing about the rate cut and due to the uncertainty nature of the geopolitical environment at this point of time, and also the rise in crude oil prices, it's creating the increasing in uncertainty with respect to the timing of the Fed rate cut, and also uncertainty around the quantum of rate cut market is anticipating. Given the kind of the market nature and the geopolitical environment at this point of time, if there is any commentary that is rather than giving the kind of inflationary data what we are getting in US and also the Fed projections, if Fed makes any kind of delay with respect to the rate cut, and also at the same point of time, right now the situation as everybody anticipating a rate cut, if Fed is in a position to increase in any rate hike, that's going to be a major headwind for the market. But I don't think so Fed is in a great mood to get into that situation. That situation don't arise. this is one of the risk market is anticipating at this point of time. In India also, we have been waiting for a rate cut, but due to the increase in crude prices because of the geopolitical environment, and if the inflation further rises, that's going to create one more headwind and the risk at this point of time towards the market. But as per the tendency of crude is concerned, right now we need to wait and watch how the crude is going to be, how it's going to behave at $100 per barrel. That's where the crucial resistance zone for the crude. Previously also, when the geopolitical issues erupted, what we witnessed was crude correcting from that 100 range. Again, it taken a U-turn, which was the favorable movement for Indian markets. So this time, we need to wait and watch how crude is going to behave at this point of time. Coming to the domestic markets with respect to the election and all, right now, market has been discounting the election. There would be a policy continuity. That's what the mood of the market at this point of time.
Right. Kranthi, what about, you did mention inflation really having that, worry if you see crude prices even shift a little bit. But another one of those components that can really be impacted is that of FMCG players, and that whole basket really changing. Now, in terms of we do have earnings from these players that are expected. Everyone's, hoping that we'll see some double digit, at least when it comes to the volume growth, not double digit, but at least an increase. We're really hovering around that 2 to 4% when it comes to most of these bigger FMCG players. Do you think, there is that rural recovery that has taken place, and which is why we could see a good set of numbers coming in from these players also? And what would be your picks within the FMCG pack for, at least for now, or one should be looking at the bigger names? Should it be the consumer discretionary, or should it be just the staples that one should be looking at this point?
You are perfect. You perfectly said, as the rural recovery is what we are witnessing at this point of time. In a typical year, like an election year, what happens is we tend to witness the rural incomes to go up, and in turn that is going to have a positive impact with respect to the FMCG companies are concerned. But FMCG companies they were the laggards, and they have been in a consolidation phase. But what we can expect at this point of time is there is a kind of some upward movement, and the relative valuations of FMCG companies also looks attractive at this point of time when we compare with the broader market indices. So FMCG can be a good proposition for the low risk appetite investors for a medium to longer term prospects are concerned. And coming for the FMCG, one can consider like names like HUL and also Nestle. One can add at tips, and also companies like Varun Beverages. Also, the stock has done beautifully well at this point of time under the discretionary is concerned. So one can add these kind of names into their portfolio for a medium to long term perspective.
Right. Interesting. Varun Beverage, a nice pick there from that FMCG space. But Kunal, if I go back to you and get your sense of, what we're seeing from the banking pack, because we did see HDFC Bank come out with those numbers, NIMs improving for the session. So give us your view on how, within the banking pack, we do have Axis Bank that will also come out with its numbers later this week. But from the banking and also NBFC space, because those are quite interesting and are showing a little bit of divergence for that matter. What would be your picks within this space, and what should one be looking at the charts as well? Is a good time to be buying HDFC on dibs as well as, the NBFC space? What would be your picks among those?
First of all, I'm sorry for the technical glitch. Coming back to HDFC Bank, yes, I feel, the markets are always smart enough to discount the things well in advance. What we saw on the HDFC Bank was 3 months of consolidation, and the breakout was at around 1480. From that level, we went up to almost 1560 kind of levels, retested the same level a day before yesterday, I think. And now we are seeing an uptick continuing. So I think in the entire banking space, from the risk reward point of view, I think HDFC Bank is well placed. With the stop loss of around 1475, one can certainly initiate a buy, and the targets can be as high as 1625 to 1630. Now, this is a view for the entire coming series of May, just not the 1 or 2 weeks. When it comes to NBFC space, I like Bajaj Finance the most. what we have seen is the counter has been underperforming since quite a long time. Recently, we saw the bounce from around 6120, 6130 kind of levels to almost 7,300 levels. But I think this is clearly making an uptrend. It's a clear higher top, higher bottom. So with the stop loss of around 7,150, one can go long on Bajaj Finance also, and the targets can be as long as 7,800 to 7,850. Again, these two counters and the views are for the entire series of May.
We're talking about the May series because we are sitting at an expiry in just 3 days from now. So Bajaj Finance could be a pick, and that one also will be coming out with its earnings. So you could see how you want to play that bet. But let me go back and then speak about the broader perspective. Now, we have seen a rally so far, and that has been over the past 1 year. We could say certain themes are the ones that have really played out. And if one in particular, we could say are these government-led, be it infrastructure, capital goods, even the likes of shipping, all of them really auguring quite well. Railways, the likes of an IRFC or even an Aircon, all of them, doing quite well. Would you say that, in this run-up now that we are already in the midst of election, do you think these are themes that one could continue to bet on and could see, or these one have already stretched and we're seeing those valuations of these kind of companies also stretch quite a bit? So would you want to still focus on this area, or do you think it should get a breather and one could focus on, the likes of the others?
Yes, Stacy, the kind of rally what we witnessed in this mixed PSU sectors and also in the shipping, railway stocks, and various infrastructure capex theme is concerned. Of course, these stocks have been multi-baggers. In fact, they have run up a lot. But given the kind of earning visibility and also the order book size these companies carries, one can hold on to these positions at this point of time. In fact, given the kind of market nature that we are going through due to the geopolitical environment is concerned, any kind of major reaction that do come in the market, whenever there is a dip in the markets, one can add their positions, in fact, in a medium to long term perspective, because these are strong business models. In some pockets, like these companies are monopolies and strong leaders in this segment. So one need to be act as a very stock specific in these business models, like the defense theme, and also the shipping and the railway themes are concerned. And these themes have much more legs to rally further. So one can keep these themes on their radar, and one can add on a medium to longer term perspective.
The medium to long term perspective is what you need to have if you want to consider these PSU led stocks that could see further action. I want Kranthi and Kunal both to wait on, because let's give our viewers some stocks that they could be looking out for on news, news flow that has come to impact these ones. Now we're talking about Zomato here, because the company has gone on to say that it will be increasing its platform fees by about 25% to 5 rupees per order. It has also gone on to suspend its intercity food delivery service that was called Intercity Legends. Now the platform fee hike would partially offset that impact that it has got on because of GST being implied on delivery charges. Remember, this is just in 1 rupee increase in convenience fee, but it could lead to a positive impact of about 85 to 90 crore rupees on the EBITDA of this company, and they have been on this path to profitability mode, we could say. Also, Blinkit really working out quite well for the company. In other news, there was also news about them getting a GST demand worth about 11.8 crore rupees. This from the additional commissioner of Central Goods and Excises of Gurgaon that has sent them this notice, this for the period of July 2017 to March of 2021. So they will be having to respond to this notice on the GST demand that has been sent across, but also the fact that they are looking to increase this platform fee and how that will really work out. Let me bring Kunal back and get his sense on, these new age tech stocks, and we are seeing quite of them, now really focus on this path to profitability, be it, through whatever way, if it is by increasing convenience fees or others, or, cleaning up their books in some sort. How should one be viewing new age tech stocks, the likes of Zomato, or even maybe a Paytm at this point?
So, till March 2023, we saw maximum comic memes on these counters, and the counters were near to 52-week low. And specifically for Zomato, if you look at the levels, the counter was trading at around 49.50. From March 2023, look at the performance. It's just been in trend. It's positive. It's just making higher top, higher bottoms, and it's trading near to all-time high. And now counter has hit the levels of those 190 plus mark. Yes, the counters are still in the positive trend, but in such counters, I would not really be keen to buy at the higher levels. I'll wait for the counter to again, make a higher bottom somewhere on the technical front. So let me just share the levels, which is as of now at around 180 levels. So let the counter cool off to near to 175, 180 levels. Initiate a buy at that level, and with the stop loss of 10 points, one can continue to ride the rally. Just not Zomato. I mean, all new age companies which are in the trend. One should not get trapped at the higher level. Focus on the risk reward. And for Zomato specifically, it's 175 as a support. Try to buy or initiate a buy near to that level.
Right, Kunal, to also give us your view on Reliance Industries. That one's going to be quite interesting to watch out for, because it will be coming out with its numbers. And here are a couple of factors that our viewers could also take note of. This being that their revenue, the EBITDA, all of them have seen rising, at least on the back of that robust digital as well as retail growth that it has seen in these quarters leading up to what we're going to see their results in. We are expecting their consolidated revenue to increase by about 11.4% on a YOY basis, coming in at 2.12 lakh crore rupees. The EBITDA is expected to rise by about 9.4% at 38,440 crores. Now remember, we're also expecting to see a recovery in their core oil to chemicals or O2C business, and this pretty much because of this gross refining margins having seeing that increase, and which is probably going to trickle down, and we are likely to see an improvement at least in the O2C business. But that aside, the growth in retail, the store additions, as well as any kind of pricing action in the telecom space is what could really one needs to be watching out for. If you have to go by what brokerages are saying, there's a JP Morgan view saying that the company will benefit from these rising crude prices, especially because of its new oil production fields that are in play. So quickly, how are the charts looking, Kunal? And then maybe I'll come to get the broader perspective on how one should be looking at heavyweights with Kranthi. But Kunal, how is one to be looking at Reliance? We already saw Jio Financial Services come out with a good set of numbers in the last week. Now we're going to hear from Reliance. What can one, other than this saying that the revenue EBITDA is likely to be stable in the fourth quarter, any kind of, what would be the factors that you would be watching out for?
So I'll restrict this discussion again on the trend line itself and the trend of the counter. If you look at the overall broader formation from November till March, so from November till January, the counter rallied from almost 2200 to 2900. End of January, the counter was somewhere near to 2900 itself. And since then, this counter has made a consolidated formation. Now that's a broader sideways consolidation. It's a broader consolidation between 2800 to 3,000 levels kind of levels. Now this consolidation needs to be taken on the higher side for us to see the new rally. So the levels which we need to watch out are going to be 3,000 on the higher side, and the support being 2,800. I think this consolidation might just continue for now, because after a stellar performance for the 3 months, I think this broader consolidation is kind of a time correction. So until this 2,800 is taken care of, I'll certainly stay bullish on Reliance. The buying zone will be around 2,850, and the resistance being placed at 3,000. Above 3,000, we can expect a massive rally of almost 200 points to 250 points.
Right. Kranthi, coming to you, since we're talking about Reliance and OMCs, that has been one basket that has seen some bit of, correction, one could say, on how the stocks have been reacting to different sort of news flow that is coming. BPCL being among your top gainers in trade today. How would you be looking at the OMC pack? Is there more, we did see one bit of change that came in fuel prices just earlier before we could hit the model code of conduct for the elections. But is there more that we could expect from OMC stocks, and which ones would you be preferring at this point?
Stacy, in the medium to shorter term perspective, given the kind of heightened activity what we are witnessing in the crude oil prices, probably OMCs can be under pressure for a medium to shorter term perspective. But given the kind of the long term prospects of the crude oil prices are concerned, OMCs are going to take that advantage on a longer term perspective. These kind of short term hiccups will be there for OMCs, but one can add these stocks on a medium to longer term perspective, names like Indian Oil Corporation and BPCL, one can add in their portfolio. Coming to Reliance is concerned, last quarter they had the maintenance exercise, but this quarter on a sequential basis, the company can post better than expected results. As per the Q4 earnings are concerned, we can see a overall outperformance coming from all the spectrum of business verticals in Reliance Industries.
Right. So interesting to be watching out for, and that is something that we will be coming back to discuss in detail, those numbers tomorrow, because the earnings numbers are expected only post 7 p.m. or post market hours today. But let me also bring back Kunal and get his view. There's a couple of queries that have come trickling in. One of them asking on IREDA. Now, this stock has been quite interesting, seeing some great swings after that good listing that it saw. It did get into correction mode as well. Right now, wanting to know what view one should be taking post their earnings, which was quite good. In fact, if I have to look at what IRDI's performance in Q4 was, the net profits did jump by about 33%, net interest income up by about 35%. Are these numbers good enough to be looking at this stock now? Would you suggest that, Kunal?
Absolutely, I'm very bullish on the numbers. But if you look at the price action again, I think the prices more or less discounted such kind of results. And look at the midterm the behavior of the counter from 125 to around 175 again. And the previous rally was extremely massive. So I think these good numbers what we are witnessing is already priced in. On the technical front, again, if I look at the resistance, it's placed at around 185. And today, when after gap up opening again, it could not cross that 180 mark, which seems to be the resistance. So I'll turn cautious on this. I'm not bearish at all, but I think this seems to be a good level to take the profit off table and wait patiently for the counter to give a breakout of 185. Above that, we can expect the levels of 225, 230 again.
Right, there's another query I'll try and squeeze in. Virupa, they're asking on the long-term view on SBI. We did speak about the other private sector banks that have come out with their numbers, and perhaps have to wait on SBI's numbers sometime next week. But what would be, would you suggest at this point to be looking at SBI compared, when you have to make that comparison between PSUs and private banks? We did see, PSUs were quite favorable and SBI being a top among that list. Would you still continue to hold this view, and how should one be looking at this stock?
So honestly, yes, I personally like SBI a lot, and the buying was somewhere near to 230 levels in the month of December 2020. And since then, this counter has just given positive returns. And look at the trend; it's clearly been uptrend. Last 3-4 months have been sideways consolidating, but again, if I look at the trend, because I'm mainly a trend follower, I give a lot of importance to that. And so for me right now, I think 715 mark is something which I'll watch out for to turn cautious. By any chance the counter manages to break that level, I'll just take an exit. But otherwise, I'll hold on to this. So the suggestion to our viewer is stay on to this counter. The stop loss on this entire positional view is 715, and keep riding this rally. I think on the higher side, we might see the levels of 815 to 825 in a month or two.
Right. Kranthi, quickly coming to you, because we've seen whole host of IT earnings as well. Do you think the worst is over for the Nifty IT index, as well as what would be your picks among, we've seen the earnings come out from the big players. We also saw Persistent Systems come out with its earnings over the weekend. How should one be? Should it be the large caps versus the mid cap IT space, or how would you be considering the IT index as well as particular players in that index?
Yes, Kranthi. Given the kind of earning outlook what we are witnessing in the bellwether IT companies are concerned, the large cap, and also relatively compared with the mid cap IT stocks are concerned, mid cap IT stocks are better positioned in a medium to shorter term perspective because of the geography they operate and also the domain they operate, and because of these specific regions, the companies are better placed. Whereas in terms of the large cap companies are concerned, there are some kind of headwinds. We need to wait and watch with respect to the large cap companies are concerned. At least we need to give one more quarter time to understand the business models, because of the deal wins have been taking a lukewarm right now, and also the recruitment also has been coming to coming to the bottom levels at this point of time, there would be a pressure in the medium to shorter term perspective. But if the investor is a longer term investor, given the kind of strong business models these companies do enjoy, that is the reason one can add the large cap IT companies like Infosys and TCS. One can hold on to their positions for a longer term perspective. But medium to short term, one can add names like Persistent Systems and other mid-cap IT companies in their portfolio. One need to have a clear balance at this point of time, as mid-cap IT companies are fully priced in at this point of time. One need to be stock specific in the mid-cap IT space is concerned. Overall, the long-term outlook, we are quite sanguine with respect to the IT companies, but there would be short-term headwinds in this sector.
Right. So short-term headwinds one can be cautious about, but long-term IT definitely is something that many of at least the experts that we speak to are preferring at this point. The fact that we are likely to see a Fed rate cut happen, and that pretty much having some good positive impact even on the IT companies. Quickly, Kunal, the picks that you have for our viewers for this week, especially that we're sitting on the expiry week. What are the stocks that you are recommending at this point?
So the stocks which I'm going to share with all our viewers, just keep one thing in mind. It's not very for the short term, but yeah, it's going to be for next 15 to 20 days. The first is Capacite Infra. I think this counter has it's showing a remarkable strength. Look at the last 5 to 6 days behavior also. It's clearly making higher top, higher bottom. It's trading presently at around 313 beginning of the show. And today it's up by around 3.5%. So I think this can be a good buying opportunity with the stop loss of around 295. One can initiate a buy and the target can be 325 to 330. The second is NFL, which is again equally a strong counter. It's trading right now at around 100 levels. The trend is really positive. So with the stop loss of around 95, one can go long on this and the target can be 110. And the third is Strides Pharma. Very much strong. I mean, in this entire correction, this counter has just been in sideways consolidation, showing extreme strength. The nearest stop loss on this counter is around 835. With that stop loss, one can initiate a buy. I'm expecting the first target to be 860, but honestly, one can certainly hold on to this position with a trailing stop loss. 900 to 925 can also be on the cards very soon. So these are the three midterm picks which I'm sharing with all our viewers.
Right, let me just repeat those picks by Kunal there. Capacite Infra is what he's picking. He's also looking at NFL and Stride Pharma for the medium term, at least is his picks that he's recommending this morning. But let me thank both my guests, Kunal as well as Kranthi, for joining us this morning and giving us their view on a whole host of stocks as well as strategies that one can be adopting in this trading session and week. But we're completely out of time, and to all our viewers, it is time to say goodbye. And thank you from the entire team that puts this piece together. But do please post us your feedback and send us your comments in the section below, and follow us on the link at the bottom of your screen. And for the rest of the updates, stay tuned to moneycontrol.com as well as the Moneycontrol app.